You realize SASRA is Sacco Societies Regulatory Authority, established through an Act of Parliament, of 2008. So Sacco Societies Act, like the word emphasis, came to now regulate the Sacco business. Like the word says, Sacco means savings and credit cooperatives, and therefore the SASRA is a body established by law to implement what you call prudential and operating standards.
Governance Voice, courtesy of the Institute of Certified Secretaries, and we are glad to continue on with this conversation. And today we want to talk about matters SACCOs, matters governance, and matters sustainability. These are very important institutions in our society because they enable a great culture of savings. Now, in the house we have the Chief Executive Officer, Mr. Peter Njuguna of SASRA, and that is the Sacco Societies Regulatory Authority. We're going to have that conversation. Peter, welcome to the show.
Thank you for having me on the show.
Yes, it's good to see you. And just in a way of welcoming you, in a minute, for the viewers who will be watching this, if someone asked the question, who is Peter? What would you say in a minute?
Thank you very much. Peter is a professional accountant. Who has dedicated his life, I think, a quarter of a decade in the financial sector, cutting across, banks, insurance, pensions, and found his passion in SACCOs, where I've been for the last now 17 years. Okay. And, he's a family man, proud father of 2 boys. That are now in uni. Yes, and married to one wife.
Wow.
Yes.
That part of the sons, I mean, it's a bit of a surprise. I would have thought they were just very young toddlers, but you did what you're doing.
Thank you.
Let's get into the conversation on the SACCOs. And my first question to you is, what role does SASRA, as we've called it, play in the governance of this deposit-taking SACCOs?
SASRA is Sacco Societies Regulatory Authority. Established through an Act of Parliament, of 2008, Sacco Societies Act. And this was, SACCOs are registered and operated, under Corporate Societies Act, which is a general statute, just like you can have Companies Act. You register and you run your business. But there is a business now within the company or cooperative which requires specialized regulation. And therefore, Sacco Societies Act, like the word emphasis, came to now regulate the Sacco business. Like the word says, Sacco means savings and credit cooperatives. And therefore, the SASRA is a body established by law to implement what you call prudential and operating standards. As a business of collecting money from Kenyans across the world, the move is always to have very clear standards so that you can, enhance transparency and accountability of that institution to the people who are entrusting them with their money. And therefore, Kenya, that was a very major policy statement by Kenyan government to have a Sacco business specific regulation whose policy objective is actually to enhance and continuously improve the whole space of governance. And that is about transparency and accountability to the depositors. Because SACCOs, like other institutions that deal with money, is about trust, it's about confidence that members have in you, and they'll give you their money.
You're right.
Money hates noise.
Absolutely. It doesn't like noise. And I love that preamble. And just top of mind thinking, when you look at the society right now and looking at some of the SACCOs and the amounts of money they manage, they're almost equal to tier something banks when you look at the amount of portfolio they have. And I'm sure that means they have large numbers, and they play a key role, especially in ensuring that we have access to good deposits. But now moving on to matters governance, because they have been on the limelight sometimes, and we have had some, scrupulous persons as well. As they say in any market, always be a mad person. Right. And I'm sure you have a few that you have been dealing with anyway. I want to talk about the key elements that we need to have for effective governance structures for this deposit-taking SACCOs. Highlight a few. We'll come to some of the examples of what you've dealt with later.
Thank you.
Yeah.
One, I have to contextualize that within SACCOs being cooperatives, because being cooperatives, then we are saying these are actually customer-owned financial institutions. And that itself brings very interesting, interplays, because you're talking a customer is a depositor, one is the owner, he's a depositor, she is a borrower, and then they form the board of directors. Absolutely. They form the management. So, and therefore there is inherent conflict. Therefore, you speak about as governance, then one, you require to have clear elements on how do the owners, who we call the members, get represented in this business, which is theirs, and how do they participate in the business? Because every SACCO's purpose is to empower its members economically through credit and providing financial services. So how then do they have a say, knowing that it's also regulated? And therefore, one pillar is to have a very clear mechanism of how members get represented and participate in decisions. Then secondly is to have, the whole question of what culture do you have? You have to, espouse good governance. What culture do you create so that people can believe you? And that, of course, defined by the values you define and the code of conduct. Because, like I said, there is an inherent conflict. By definition of a cooperative, there is a conflict. So how do you navigate this to actually enjoy that trust from your members that they can give you more and more of their money? And they know whenever they need it, they'll get it. And that, therefore, means you need a board. That is how the board of directors is, constituted, noting that cooperatives do so by election. So what system do you have in place to elect the right people? And who will therefore put structures that these different elements, the members, will be told, you are a member, you are the owner. But remember, you are the depositor. When you're the depositor, you need your deposits protected. Whom are we protecting from? We are also protecting from the borrower, who is also you, who if he doesn't pay the deposit, you will not get it. So putting in place, the board, structures and understand their role, that they become the cog, being the mind and soul. So the board has to be very, very much aware of the nature of institutions they run and the inherent risks that come to that. Then when you put that in, you ask yourself, we are collecting money, what risks is this money, by nature of business, what are the risks? So you need to have a very clear internal control risk management system, because your major job is to deliver the promise to the members, but aware of the risks that are in this business and how do you manage them. So I'll mention those as the key elements: very clear member participation framework, a board that is conscious that we are the soul and mind of this business. Then you must put a culture that everyone sees the institution, he can actually say my money is safe here. And then put, from a business perspective, the framework, risk management, internal control system that as you can trace a penny that a member saves all the way to the end. It's not that others are falling somewhere that you can't tell. Because those are the challenges we are feeling, and we feel those basic, some of the elements we think are very, very critical. And at the end of the day, all these systems should then be able to demonstrate that you are truly accountable and transparent in your transactions and relationship with your stakeholders.
Speaking about risk, since you mentioned that we need to weigh risk whenever we are dealing with people's money. And SACCOs really have to constantly think about that, because the last thing that people want to hear is that my money is not there. What is this that you could highlight? I know there could be a lot that could be said, but you could highlight as risk management practices that should be in place to ensure that the long-term sustainability of this SACCOs is being achieved.
Thank you very much. I'll answer that from a practical perspective. We spoke about SACCOs and their size. Today, the SACCOs we regulate 357 are counting $1 trillion plus. Just exceeded $1 trillion in assets. This is money saved by ordinary Kenyans. And therefore the question of risk comes in. But then when you unpack that, you realize the $1 trillion, 77% of it is credit to members. And therefore, that tells you to us in financial regulation, especially deposit taking, we say we exist to protect member deposits. What are you protecting them from? It is how they are applied.
Yeah.
They are lent out as loans. They are used to invest in equipment, properties. Then the question that comes from a very basic perspective is, what systems have we put in place to make sure that the loans where we apply this money, we can get it back, or we shall get value back. We are not putting money in assets that will sink with our members' money. Otherwise, the deposit is at risk.
You're right.
At the bare minimum, the risk that any board member of a SACCO is, we have been trusted with the deposit from our members. How are we applying them? Are we applying them in assets, investments, that tomorrow, when a member comes, he or she can get back the deposit?
Absolutely.
He or she can get the loan. So we put great emphasis in how the money is applied. That is the kind of assets you invest. And therefore credit, when you then unpack I talked about 77% of the 1 trillion being loans to Kenyans. Then you have to put in place mechanisms to worry about the credit risk, the default risk. How am I managing that?
You're right.
In this day and age where we are moving away from employer-based kind of thing to opening our bond to gift loans to every Tom, Dick and Harry, and which is good from a financial inclusion strategy. But how do you make sure that person will actually pay? Because you are accountable to the depositor. So for us, the credit risk becomes very, very important, because if you don't manage that, it will crystallize to liquidity risk, to become financial risk, because you will not be able to meet your expenses. Sooner or later, you will start living on deposits. But you are given money to trade, make money to run the business, give a return to the depositor, and return the deposit. So for us, that sign of what you call the balance sheet, that the assets you're employing your money to, the quality they are, they must be liquid, repairable, and realizable. Because when you do that, simply, you, as a board, you'll be, and of course that now speaks to so many other things you must do, because from operational risk, the people you employ, the kind of people do you employ, what policies and system do you put in place? Because you cannot run the kind of business we are talking today in Excel worksheet. You must have a system.
You're right.
And the traceability of the money. So it is very critical, therefore, that any SACCO learns that the biggest risk to their existence is how the kind of loans they give, and the kind of assets, investments they make on behalf of their members.
Absolutely.
They must have a very clear policy to make sure risk is mitigated.
Wow. Thank you so much. And that's quite elaborate. But I have a quick question to you. For anyone who is watching and saying, hey, I got banned maybe way back by a SACCO, and they feel, would you highlight, I know there could be very many things, maybe your top 1 or 2 things that you could say, if you are considering to get into a SACCO, as Peter, this is 1 or 2 things that I tell you, you observe before you first of all start considering going in there. What would be those?
Very good question. And I think for me, looking for a SACCO, remember, a SACCO, you are putting your money there.
Absolutely.
And we always say, you put, you know, a shilling begets a shilling. So you must join a SACCO that can manage your money well. So you must look at a SACCO, and there are 2 things we look at. There is a governance, transparency. If you look at their statement, what do you see? Do you feel like they are speaking to you, the information, so the disclosure they give, and in that paper, look at what kind of cash reserves do they have. Because if they are living on borrowed money, even yours will disappear. So for me, liquidity, just like any bank, any deposit-taking institution, liquidity is king.
Absolutely.
So that means if your SACCO has liquidity, you will actually see they have well capitalized. And they are actually investing in assets that are not losing money. That is very critical, and it must be what kind of, it's not just cash equivalent, no. It is money that is invested in things that you can back. You're right. We have seen situations, someone says cash, but when you give me the confirmation, 0. So it is very important that you look, and the institution, you say, this is a deposit-taking institution. Okay, let's see how much money you have. How much have you been trusted with? And it's not about the billions, it's about relative sum to their size. Because their liquidities, their ratios we measure, we say liquidity should be at least 15% of your deposit. And then we always say, because to be able to refund deposits on account, you need to have assets that are liquid. So it means you must therefore be reserving.
Yeah.
So if you find a SACCO has a very thin ratio on liquidity, then you a lot of fixed assets, properties, big things like receivables. That you can't, then there are questions.
Wow. Well, Peter, let me stop you there because I know you have a list. But I know you constantly deal with boards, especially because this is the governance structure, as you have highlighted. And it will be important as well to understand the importance of boards. And I know we have highlighted this in a previous episode, but from your end now, in the SACCO system that we're talking about in SASRA, where is the place of ensuring that we have good transparency and good governance, and where does the board really play this role?
Like I said earlier, the board happens to be literally the soul and mind of the business. They give the strategic direction and oversight.
Yes.
Whoever they are working with, their management. Therefore, their role is very, very critical. And that means their place will therefore, it's critical. But now, how do we check and demonstrate that they are critical? It's the one, how they relate with their members. Because remember, like in their company, a board is actually stewarding that business on behalf of the owners.
Absolutely.
So one thing you're concerned is, as a steward, what information do you give to your shareholders? The primary stakeholders were the members. What information, how regular do you, that engagement with them to give them the information that ensures what I call, or rather is called a cooperative balance. That as a democratic, institution, which cooperatives are, the decision making is facilitated by timely information, adequate information. So a board that gives members timely information and adequate to make a decision on the business of the day, or to be aware of the business of the SACCO, how it's going. That is very important. Then, besides that, then they must also, at the end of the day, remember, you're investing your money. You expect that money in quotes to work for you, give you some return, and give you loans. Then it means, from economic point of view, then that money business must be profitable, because you cannot be ensuring there is a democratic balance by providing information timely and adequate for members to make a decision about their finances and about the institution, but the institution is not profitable. It's not making money for the members. And when you achieve democratic balance and economic balance, then you are in a state you would call cooperative balance, a very tough balance to achieve. But when a board espouses to reach that, we are sustainable as a business, and our members, anything they ask, because they are the owners, they have access to them. So a board that lives within that, and therefore they put in place then those systems and structures to make sure we have the right people. Because remember, the board, they are not interacting with the board member every day. They are interacting with the management. So they'll go down to put the right people, define the right policies, and put in place the right system that a member who goes to a branch in Kisumu or a branch in Mombasa has the same experience. And I believe that's the vision. We have to professionalize these institutions to that level where members literally feel their money is actually safe with that institution.
I love that. And I just wanted to dig deeper a little on that part of the governance that you're talking about. Because as you've said, yes, you're preparing these institutions, which some of them are governing. I mean, when you're talking about $1 trillion, this is not small money, this is big money. They're almost competing with the entire pension that we have in the country. And I just wanted to ask you, because definitely as these institutions grow and govern themselves well, they need to be also very keen to ensure they do not in any way hurt the depositors. And one of the key ways of growth, and I've heard some of the SACCOs say, is actually going cross-border. So themselves branding themselves to be international, as we've seen with some of the financial institutions do. And I wanted to ask you, what's your one thing that you would say in terms of putting governance frameworks that you would advise or even highlight to align them with national and even international standards for good governance?
Very well, thank you. Now, I have spoken to what as an authority, from where I sit, we vision for the SACCOs, and we always pushing them through the regulatory tools we give them. And besides that, and therefore we have, like last year, we issued a guideline, revising our earlier one we had given in 2025, just to incorporate what you are saying. these business are becoming bigger and bigger.
Absolutely.
They started with a branch, you have a branch network, 10, 20. So how do you, make sure that you are able to oversight that business?
Yeah.
They are also having subsidiaries and as related companies. So how do you, question of investment. So we've been also trying to changing the guidelines to do that, to align not just with the international best practice, but also reflect the cultural context in which we are in, where, as you know, a SACCO reaches 15 years, like I am, and they want to have their home. They want to invest in land, property. So we are very, we reflect those reality. Now, talking to governance, what we do, we partner a lot with the institutions. From governance, because, for example, taking one element of governance like transparency and accountability, which is largely reflected through financial reporting as a tool to communicate to shareholders and other stakeholders that you work with. We partner with ISPAC. And the SACCOs report per the reporting standards by the professional body, and which are international. But we've gone further to participate. SACCOs have always participated in financial reporting awards. Where you say, we are doing our best, but can we get an independent person to come and look at your books and say, yes, indeed, you are doing good. That's very, very important to make sure that you are living to the international. Then we have bodies like ICS. We've partnered with them in matters governance, the COG award. SACCOs are major participants in that. And again, it is to tell these people, good, you are cooperatives, yes, you are member-based, but please, there are good practices, international good practices in governance, in reporting that are, that apply across board. Can you open yourself to, to evaluation, assessment on governance, so that we actually see how are you practicing governance? So by partnering with this, we're also saying it's not just about the law, which is just national registration, but we're also borrowing from best practices from other, standard setting bodies, whether governance, financial reporting, and even we do have an international body for SACCO regulators. We had a meeting in July for the first time we have held in Kenya. It's never had been held in Africa. We were in Kenya, so we had it. And they also, set certain principles. Looking globally, we are talking of SACCOs from North America to Brazil. What are those good practices? So, and therefore, when we are issuing guidelines or making our law, we borrow from these practices. So there is something we always try to be dynamic. And at the end of the day, you want to push this. Now, but talking to, besides governance, there is also what we call regulatory practices. What we do today as a regulator, we have what we call prudential standards. These are good practices that have been tested and tried, best practices in regulation of deposit-taking institutions. And we require them to comply with that. Now, but beyond that, we are also now asking ourselves, these people are mobilizing so much deposits. When you look at other deposit-taking markets and jurisdictions, you say, yes, you can do everything, but you can make one decision as an institution, boom. Now, what do you do? So that's why a question of deposit protection is very, very key. You find it, all other key financial players have them. They've investor compensation mechanism, depositor compensation mechanism, or policyholder compensation mechanism. So we are now very advanced conversation on a similar deposit compensation for SACCOs. So that should the worst happen. Because regulation is not a panacea to failure. So we also put, but also there are other structures. We are trying to think about how do we structure the industry, because our industry is such that 1 trillion, about 70% of it would be in the hands of like 50-55 SACCOs. The rest is in about 230 SACCOs. So the question is, what structures do you put in place to support these small SACCOs? So we're also looking at structures we can put in the market, if it's technology, which bring transparency and therefore trust. Technology is an enabler and equalizer if you apply it rightly. And therefore we are encouraging SACCOs that we are pushing a policy reform where we have shared. So small SACCOs can invest in a technology platform. And that is very, very critical for them to gain trust. Today, if I log in on my account in the SACCO and I can check what I've paid, it's posted. That's built trust. So you tell them, with real trust, we need to invest in structures and systems. So by cooperating as SACCOs, we can build a platform where you don't have to worry about technology. Yours is to to just do your business.
Absolutely.
So we are pushing those agendas, and that go to strengthening the regulatory framework where you have a pillar of prudential regulation where you comply. Then you have other structures, including liquidity. You want to be able, all this money we are talking about, you want to be able to see the liquidity situations 24/7 in the SACCO industry.
Yeah.
And that goes to giving us confidence as a regulator, but also the market.
Yeah.
That the SACCOs are truly financial institutions. So those are elements that are critical. We've got to reinforce governance, because what they do in the world of cooperatives, and this is important, I explain that cooperatives by their nature, that inherent conflict, the structure brings certain governance challenges. But when you put these structures, then you are enforcing and adds other checks and balances to strengthen the governance, because minor check would be there today. But something may just change, like in the political space. Njuguna is elected.
Yes.
And leadership is also individual.
Yes.
It changes. But when you have structures and systems within the industry that also regulate your behavior, then you know, okay, I came here with these intentions, but the rules, the perimeters defining how we conduct these are such that I am controlled, even at individual level. And that means enhances greater transparency, because we'll be able to see, today we get reports monthly, some quarterly, but with technology you can get these reports quickly.
Absolutely.
And that means bad decisions, we shall act fast before the decision is made hurts the business.
Yes.
So there are a lot of reforms we are also pushing to strengthen governance.
As we come to a close, Peter, one of the key things we have seen as well sometimes on the news, or SACCO has done this, or this has happened, and everything else. And I'm sure it's a pain, and you have to sit down and really do things. I would have wanted you to highlight, without even mentioning names, some of the tough course of actions you've done sometimes when it comes to that, and just maybe highlight some of the emerging governance challenges that you've observed that are related to that regulation and member engagement as we close.
Right. Thank you. I think one, there's an emerging trend. We note one, because as this institution collect more and more money, there is also that tendency where the leadership also thinks they can spend money anyhowly.
Yeah.
Okay, that's a major concern for us, and that is an abuse of office issue. Investing, making decisions, they could be strategic, but you actually see they were not well done. And remember, the board makes the decisions. They are the soul and mind. They make the present to members, boom, and you invest. Then it comes to strategically hurt the business. Now, we have seen those kind of things, whether it's giving loans. You realize, oops, the market is very competitive. I'll give loans without tightening the underwriting. So you give $1 billion, but a third of it or half of it cannot be repaid. And I think that's why you note in our latest report, we are including a lot of disclosure, so that you as a member, you are actually able to see, how is my SACCO capital. You may not understand, but you might ask your son or daughter, what does this mean? Today with AI and Google, you can ask, why is capital important? Yes. Because this is the other one is very high, ours is very low. Liquidity. It is the oxygen of a SACCO business. Cash. And cash, for any business, cash is king. So, but for SACCOs even more, it's the oxygen. Now, then you go to quality of loans. So we publish that data. Is to empower people. Now, when you violate all these things, indicators, we have powers to remove directors, and we've done it. And even today, I have cases in my table where I'm considering that these guys need to get, and we charge them. So but now, over and above that, there are also rules we are tightening. We feel that consequences management in SACCOs and broader cooperative is not very tight. We need to make it very painful for you to pinch members' money.
You're right. Yeah.
It is not. I think we have to balance between fair administrative action, the rights of individual, to the greater public good or interest that the SACCO carries. I think that space we are struggling because, and I think it takes a lot of time where we initiate actions and members feel we are not doing enough, but it's because one, our constitution is very demanding from a fair administration. There are so many things, but we are asking ourselves, how do we use navigate this to make it more painful that the CEO, the board member, director has, or she has managed an institution. We have a clear mechanism to recover what he or she has gained unfairly from this institution, and the pain they feel, the consequences of that action is made very, very painful. We feel that is critical to actually stop, enhance governance and ensure that we stop getting, people whose intentions are not aligned with the expectation of the members and the good governance that we expect from them. So that for us, there's a cooperative bill that is before Parliament right now, and also Sacco Society is actually reforming to bring these kind of reforms. Just tighten and enhance governance, because it's about behavior, it's about personal values, and at times you may not regulate my values, but we can tighten the law such that whoever gets through that, it's about fit and proper test, it's about suitability criteria on how we get people into office. We have removed CEOs, and currently today we use a lot when you're in office. We find you, this and this has happened, we remove you. And people take us to court, but we thank God that 99% of the cases we have won removing people. So, but we think that is not enough. We need to make sure that besides the removing you, we recover every penny. And the interest you get.
Very quick one, because I have to ask you this. I told people I'm meeting you. If I want to start a SACCO, I know that this can be a whole conversation. But in a nutshell, a minute, what are some of the key things? Because some people just start as a chama or that kind of thing, and then they believe, more people are interested, and they start thinking SACCO. Churches do the similar things, all those kind of things. I'm sure you've seen enough of this. What are the quick key things that they need to check in before they can, come to you and say, we want to register this, and then we close?
Very good question. One, we license SACCOs. We don't register.
You don't register them.
Register is a different state department of cooperatives, and those are county departments, cooperative departments of cooperative across the counties. But I think we require 10 people to register. Very simple. We want to tighten that. We have too many SACCOs in this country. We want too many. We need to tighten that because SACCO is about money. And you need scale. And therefore you have your chama, it's okay, but when it thinks about a SACCO, we are tightening the regulatory regime, and it becomes a burden for you when you are too small. That's why SASRA, we regulate SACCOs 100 million in deposits and above. All a digital SACCO. If today you are here, we come together, you want to start a SACCO and operate digitally, what we call digital SACCO. Everything we regulate you from the onset, because we have seen things happen in that space. But I think for me, anyone who has to form a SACCO, you got to be very clear. You can operate a chama for all you care. And it's good, it has its space, and they are very popular in Kenya. There's a whole literature about them. But when you think about the SACCO, it gets more regulated. Now you got to think about all of you as members aligning your needs. What is it you are looking financially? Because there are thousands of SACCOs that can help you meet.
Absolutely.
You don't have to reinvent the wheel. They have invested in the infrastructure, everything. But if you want to start, it's a regulated space, and you want to regulate it even more. In fact, our vision is that through SACCO shared technology platform, that you are registered today by the commissioner, you plug into technology platform from day one. See the way we are doing for education sector. We are saying from ECD.
All the way.
You register. We can see you. That's what we want. A SACCO is registered. We can tell. You are building more deposits. How are you applying them? We want to be able to see that. So it gets more and more regulated, and which is good for you when you want to come. But I'll also say that the reporting requirements and structures you need to put in place, people you require, it could be a costly affair. But for a chama, you just meet behind the church or at my house and transact our business. So I think so it's good. Thank you.
My goodness, thank you so much, Peter, for your time.
My pleasure.
There you have it, Peter Njuguna himself, the CEO of SASRA, that is the Sacco Societies Regulatory Authority, and he's spoken quite a lot. This is something that touches really on the majority of the populace, and as you've heard, the metamorphosis into many other things, starting from chamas and all the way up. And I hope you've gotten your insights, especially on matters, what red flags to check. I mean, what are the governance structures you need to highlight and all that. And of course, really, even when you can tell that things are not going right. And this and more conversations will be happening right here at the Weekly Governance Boards. Thank you so much for your time. Bye-bye for now.